Trading with the trend. It's a pretty common tip. And when you use the Supertrend indicator, you actually get objective means to determine the state of the market. And that's going to make your trading a little bit easier. Before we get started in this video, I'd like you to hit like and subscribe to our channel. That way you can be notified anytime we put a video up. All right, now back to the Supertrend. When you include it inside of a complete system, you actually can also get a buy and sell trigger. And that's going to help take a lot of subjectivity out of your trading. Now, when you talk about the calculation for the Supertrend, it actually uses the ATR, which is the average true range. And that takes into account the volatility of the instrument that you're looking at. And that ATR is then adjusted using a multiplier setting, and that's going to determine how sensitive it's going to be. And once you see it on your chart, you're going to see a line that turns red and it turns green. Now, the changing colors, that's going to determine the trend direction of whatever you're trading. When that indicator is going to flip to green, to closing price is above the line. Then you get a buy signal. And once price closes on the opposite side of the line, it actually flips from green to red, and it's a sell signal. Now, like all technical analysis tools, there are some parameters that you can adjust. Now, remember that changing these values, it can actually make the indicator more sensitive or less sensitive to price movements. And that could be a good thing or a bad thing depending on how you use it. And when we're talking about the Supertrend, you can adjust the period and the ATR factor, for example. The period setting is the look back for the ATR calculation. And the factor is just what the ATR is multiplied by to offset from price. Just make sure that when you adjust any setting and you put into a trading strategy that you've actually tested any change that you're making. Now, the default setting is a period of 10. The factor is 3. Any changes to those numbers can affect how you're going to use the indicator. Now, let's just say it. There is not a best setting for this indicator or any indicator. And again, any changes that you make to the indicator, you must back test it before you use real money. When you have a smaller setting, the indicator is going to be more reactive to price, which means more signals. Higher settings, it's going to remove some of the noise from the market, but that's at the risk of less trading opportunities. Look at this daily stock chart. We have two sets of settings. Okay, the bottom one is the quicker version. And the bottom chart does react quicker to changes in price, but it can also lead traders into a trend change during a consolidation period, right? So only you can determine if a faster setting is the best setting for your style and your approach to trading. This is going to be a strategy that you can start testing today. And we're going to use two Supertrend indicators. We're going to use a short-term one. It's 10 and 3 is the settings. The longer term one is going to be 30 and 9. Our initial stop loss will be via the ATR. And you may want to change the color of one set of lines to avoid confusion. Now here's the rules. Very simple. We're going to trade in the direction of the longer term trend. So the higher Supertrend line is black, that's short. Blue is long. Only going to enter trades when the short term Supertrend flips in the direction of the longer term trend. Our stop loss can initially be set at the shorter term indicator reading or ATR. That's entirely up to you. We can trail a stop loss on the short term line once price starts to advance. And you can also use price targets using risk multiples. On the left here, we are only allowed short trades because the longer term indicator is shorts only. If it flips to green, the short one, we have to ignore that because we're using basic strategy parameters and following the longer term trend. So remember, our entry is a flip of the short term indicator in the direction of the longer term one. Okay, we're not going to enter on the longer term flips. And for our purposes in these examples, and when you're testing a strategy, if you just look at using 1R targets to exit for profits, it can give you a good judge of how that strategy may react in the future. So here, trade A stopped out for a loss. We then get a flip to the long trend, and now we're looking for long trades. The trade at B is stopped out. The trade at C runs for a full 1R winner. And finally, that trade at D also hits the 1R profit target. Now, there's going to be times when that short-term trend changes on a gap up or down in price, or when you see a very strong candlestick, a very large one. At those times, the stop loss can be quite large, which makes hitting a 1R target a bit challenging. So you have to decide whether you're going to accept the larger stop loss, skip the trade, or wait for some type of corrective action in the form of a bull or a bear flag. Now, these same settings that we're using, they can be used for longer term trading. However, we do need to have a means to re-enter a trending market. And we can use the pattern of a trending market to re-enter any trade that gets stopped out without needing a flip in the indicator. Now, this is an advanced trading technique. It's going to require you to have some knowledge of price structure and what a trending market looks like. Uptrend is higher highs, higher lows. A downtrend is lower highs and lower lows. Let's look at some pullbacks. And this is a daily chart of crude oil. We can see a big move up. We see a retracement. The short-term indicator turns red. And you note that price pulls back into an area that supported price in the past and began to rally. So after a brief pause, price begins to put in a lower high, but it stalls. So an entry on the break of the swing level confirms that a new high was being made after a higher low. This is the definition of an uptrend when you consider price action. Your new stop loss, you could just stick it below either swing low level. It's up to you. And depending on your current market exposure, a trader may actually use that flip when it goes green as another position in this instrument. Let's wrap it up. It's pretty straightforward. It's a volatility-based indicator, shows the direction of the predominant price action. Right? We can use it for a buy and sell signal. We can use it for trend direction. And when we include another one, we can use it as a trading system. When you use two indicators, it actually gives us a trend filter, and that can help decrease the number of whipsaw trades that we're going to take. And if you're a trader who has an understanding of price movement, structure, you can look to add different variables to enhance the strategy. Now, these same traders are going to be able to define a ranging market and probably find the better charts to be trading. The fact that this indicator is based on volatility makes it an indicator that I personally respect. And as always, proper risk management is vital. And you can use the ATR to help position size your trades if that's what you want to do. Hope you enjoyed this video. Make sure you hit like, subscribe. Any questions or comments, put them below. We'll talk to you soon.